Hello, welcome to the Bitfluencer podcast, where we highlight the brightest projects in the Bitcoin ecosystem. Today, we are here with Bob Burnett, who is a Bitcoin evangelist and also the CEO and founder of Barefoot Mining and a board member at Ocean Mining. Hello, Bob. How are you?
Hey, great
Hi, Bob.
to be
Welcome.
here. Thanks for having me.
Well, I'm really excited.
You know what, but I want to say just one thing today is that we need more women and we need more boomers in Bitcoin. So I feel spoiled tonight.
You have both of us right now. Well, I'm really excited to ask you a lot about questions about mining.
Yeah.
I think you have a lot of experience that you are going to be able to share with us tonight. But maybe why don't we start with telling us a little bit about what you see that is happening right now in mining that you think is exciting?
Wow, what I think is exciting. Well, I think we're starting to see some awareness that mining has been going down a dangerous path. So there have been a lot of centralization forces within mining. Hash rate centralization, geographic centralization, pool centralization, block template centralization. And I think those things have largely flown under the radar. And now I think the awareness level is kind of increasing that these are issues. I don't want to be an alarmist. I don't want to tell everybody like, hey, the world's going to end. But we're still on a dangerous vector, right? And these things have to be corrected, and correcting them now is really important to preserving Bitcoin, as I think most Bitcoiners believe. In other words, the spirit of Bitcoin, the immutability, the censorship resistance, the borderless aspects, like those sorts of things. They all require true decentralization of the things we talked about, like block template creation and hash rate. And it doesn't mean Bitcoin would end, but like I said, you could kind of lose the spirit of Bitcoin if these things kept kind of moving in the wrong direction.
Well, I'm glad you started on the subject, because that's one of the things that I would like to talk about the most today, and is what are some of the factors that you think are contributing towards this centralization?
Okay, so the first thing is that if we went back a decade and we looked at who were the miners at the time, the miners were largely plebs. The miners were small individual operations, running one machine, running 5 machines. It was very simple, and it's turned into a business.
Yeah.
And especially post the China mining ban. So the China mining ban in 2021, second half of 2021, it caused some things to happen, right? So there was a shift from the east to the west in terms of the base of mining operations. So that created some geographic centralization. But what it also did was that period, the second half of 2021, was outside of the very early days, was just enormously profitable. Actually, it probably was. It's measured in dollars, which we're Bitcoiners, we measure in Bitcoin terms, but in dollar terms, it was phenomenally profitable if you were lucky enough to be mining then. Now, I was, and so, we just suddenly overnight got twice as not twice as profitable, like 8 to 10 times more profitable, because we had exactly the same cost structure with double the revenue when China went away. Well, what we saw happen was several companies looked at that and went public. Okay. And so they said, hey, without naming names, to at least at this point in the conversation, we won't name names, but we could later. But a lot of people that maybe came from kind of more of a Wall Street mindset said, wow, I'm super profitable. I'm never going to be more appealing to the outside world than I am right now. So I'm going to rush and go public. And I'm going to see this massive influx of capital, one from the IPO raise, but two, it's much easier to get loans, to create convertible debt. A lot of the sailor strategy stuff that's been happening happens with the miners too. So this massive rush to go public and then as they got all that money, they dominated the purchase of the mining equipment. Some of you might remember that have been around for a while. In 2022, especially the first half of 2022, the price of mining equipment was insane. If you wanted to buy an S19, for instance, in that time period, the price went from $12,000 in, let's say, the middle of 2021 to $12,000 in the early part of 2022. And that was because all this capital flowed in. They sucked up all the equipment. It meant it kind of forced all the plebs to either go out of business or at least kind of put a stall on their expansion. So we saw this shift in market share from the small guy to the big guy that honestly hasn't really stopped. We're sitting now at about 35% of the hash rate in the hands of the public miners. So 35? That was 35%. 35% is in the hands of U.S. public mining companies. So it's a lot. It's a lot.
Okay.
From essentially 5 years ago, zero, right?
Okay.
So or even 4 years ago, it was zero, and now it's 35%. Now, those that don't know my background, and I won't bore you with it, but I was the chief technology officer of a company called Gateway back in the 90s and 2000s. And we were a Fortune 200 company. I was part of taking that company public. I understand what it's like to be in a senior executive position in a big corporation like that. Well, part of that mindset is that you have to produce every 90 days. Your quarterly earnings reports become your rally cry, right? And because the world judges you in those 90-day segments. And so, which is a very high time preference mindset. Those of some Bitcoiners would say that's a very high time preference mindset. If you also look at the bios of the public mining executives, you really won't see Bitcoiners. You won't see the same profile typically out of those people. You'll see people with Wall Street backgrounds, maybe energy company backgrounds.
Okay.
So I'm not saying there aren't any, but on the whole, they are not Bitcoiners. They are fiat mindset folks, the way that their structure is. So when we get to go ahead, Danny. Sounds like you may have a comment.
I was just going to say they mine the Bitcoin and they sell it because they just want to make fiat out of the mining. They don't really want to make Bitcoin out of the mining.
Kind of. They may or may not sell it. What they care about is the stock price. I'll put it that way. And if the market rewards them for hodling, they'll hodl. But they're not hodling because of the way you might hodl, right? They're hodling for a different reason. There you go. Fix the money, fix the world, right? So actually, I'm glad that you pointed that out because on the whole, they don't come from that mindset. And even if they believe that somewhat, their first priority is the price of the stock. And they almost have to do that, by the way. When you take a company public and your owners become the general public, you have to manage the company to their expectations and their desires, not yours even. So, but most of those people are fiat oriented. So what happens is when things like mining centralization happen, when things like the payout methods of the miners changes from predominantly PPLNS to FPPS. And we can talk about what that means later. But what it, in simple terms, that means that they get paid a very consistent price every day versus some variability on a daily basis. When they no longer participate in block template creation, their perception is it doesn't change their bottom line, so who cares? So these things lead, when you have 35% of the market with that mindset, it takes, it would take almost all of the remaining mindset to over, in other words, if it takes almost all the remaining people to really care about Bitcoin to preserve some of the things that we're talking about.
Well, I mean, I think it's very interesting that you just said that right now, at the moment, the public companies don't care who makes the template because on average, it will turn out to the same income. That said, if they were pressured by a government to censor transactions, that would quickly change.
Well, it may or may not. If the governments came in and let's say they created blacklists, and there were, let's say there were 10,000 addresses that were part of a blacklist, it may only affect 2% of the block, 2% of the transactions in a block. So it may not even have a major impact on the fees. And I don't know how technical your audience gets, but in an FPPS pool, which stands for full pay per share, the pool doesn't pay you based on the blocks that they win. They pay you on the average of all the blocks that are won. So even if the transactions are not in, even if the censorship is occurring in the pool that you're in, you'll still get paid as long as those are included in somebody else's block.
But one moment, because what you said is exactly what concerns me. Because
Yes.
From your perspective, of course, you're describing it from like the investor's point of view. They don't care if censorship is happening because they will still be receiving approximately the same amount of money.
Yes.
But that's why it is concerning for the plebs and for the users, because then
Correct.
it would be possible to censor, and the miners are not necessarily financially incentivized not to censor. So that's, I think, one of the biggest, when you talk about the core principles of Bitcoin and how they can be eroded over time, to me, that
Yes.
is the scariest one to me, hands down.
Yes, I would concur with you. I would concur.
But that's why, centralization happened at that moment because there was like a spur of financial, of liquidity. But do you think that selfish mining influences the decision making in the pools at all? Do you think that's happening on a regular basis?
Define selfish mining.
Selfish mining is the act of withholding a block after you find it, so that you can have a larger chance to find a second block before someone else finds it.
I don't think that's happening today. It's too risky. Only Foundry and Ant Pool would have a little bit of a chance for that to happen, but it would be very, very difficult mathematically for that to happen. What could happen, though, the danger point for me, as I see it, is, so I'm part of a group. I call them horse class miners. So we do small to medium size commercial operations, and we're privately held. I'm not beholden to any public market. If, let's say, only 10% of the market of the mining industry were people like me, and 90% were these big corporate entities running through just a couple pools. Then I think what they would do is the opposite. When if I mined a block, let's say, and I present it to the network, I think they would ignore it. And then they would try to mine over the top of it. So they would orphan my block. Because they would mathematically, even though I've just mined a block, let's say I blocked block number 1 million, okay? They could ignore that block, and then try to mine block 1 million and 1 million and 1 before I mined number 1 million and 1. And they would have mathematically, they would have a really good chance of doing that, because the 10% is only going to win 1 of every 10, right? So they could get several blocks ahead. So that would be a very effective way of doing that. Now, the bigger that number of, let's call it ethos-centric miners exist, the harder it is for them to do that. If they only have, if they have less than 50% of the market, there's really it really would be stupid for them to try to mine on top of our blocks. And even if it's like 70-30 in their favor, it still probably doesn't work out for them very well. But it's certainly possible. And if they were subsidized by the governments for those cases where they lost, then it would get really dangerous. So, yeah.
Bob, I wanted to ask you something. I wanted to show you. So we saw the price action in fiat lately, and I want to share something with you, which is very simply, just one sec. I want to share the following. So basically, the hash rate doesn't care about, as we know, about the price action, So
yeah.
This makes me think, when you talk about, do you see the screen at the moment?
Yes, I do. Yeah.
Okay. So basically, you were talking about the issue generated by public companies, but what's your position about nation states mining, who don't even care really about the cost of mining at a certain point, in terms of what you were talking about, censorship and stuff like that?
Okay. This is a big question. Tell me to shut up if I go on too long, because I could ramble here for a while.
We're here to learn, Bob.
Okay. So let's hit this in a couple pieces. Let's talk the first piece. So the first piece is, miners, for the most part, don't care about short-term price action. And part of the reason they don't care about short-term price action, for instance, what's happened over the last couple weeks, right? This up, down, is that even for me, so my business runs on a 30 to 40 day cadence. Okay. So what that means is, as an example, on February 1st, I mined some Bitcoin. And on February 2nd, I mined some. On February 3rd, I mined some. So I'm mining it, and I'm getting my payouts. If the price was, let's say, $90,000, I don't know the exact number, but let's say it was $90,000 on February 1st, and then it dipped on February 28th to $78,000. I don't care that much as long as it recovers by, let's say, March 15th. So the reason is that I pay my bills on a 30-day schedule. Right. So I can't hodl all my Bitcoin. Like I have to sell some. I hold as much as I can, but I have to sell some to pay my employees and pay my bills. But I have the latitude to sell at any point in that 30 to 40 day window. So I don't worry when it goes down or it comes up. I might sell a little on a peak just to lock in.
Basically, you have somehow forced to time the market.
A little bit. Now there's products that are getting better that allow us to hedge, but my point being, I don't worry about short term, meaning let's say inside 30-day volatility. I don't care at all. Okay, it doesn't matter. And I think most miners are that way. We don't pay bills on a daily basis. We pay them for the most part monthly. The second thing is that mining is an interesting business in that if conditions really plummet for an extended period of time, we can turn off instantly. So the moment we decide it's not the right condition, we can turn off. But like for me, when it dropped to 78 or 79,000 a few days ago, even I'm still profitable at that number, which I can say that. But if I wasn't, I still would have kept mining because I would have been confident that I would have been able to sell at a higher price before I had to. There's a little bit of gamble in that. Mm-hmm. But if we had 3, 4, 5 months of extended depression, that's when I might turn off. But now let's do the opposite. If we woke up tomorrow morning and Bitcoin was at 200,000, I can't react to that very well quickly. Like it takes many, many months to react to that. So in other words, mining can react almost instantaneously to the downside, but it takes a really long time to react to the upside. Mm-hmm. Now, the reason that you had that chart that showed that continual upward trend is in large part because of the public miners. Because what's happened with the public miners is the market has largely rewarded them positively, not for profitability, but for hash rate growth. So as they raise money, they've learned that they can offer a bond or offer some new share issuance, generate more cash, put it into mining expansion, and the market has rewarded them with a bigger market cap as a result of it. So it's a place where the economics and the incentives get a little misaligned with Bitcoin. So if the public miners were rewarded based on operating performance, we would not have the hash rate we have. I believe the current hash rate is about 20% ahead of where it naturally would be. That because of the public miners and their ability to get access to easy money and the market rewarding them for expanding hash rate instead of rewarding them for profitability has caused this problem.
Mm-hmm. Okay.
So anyway,
so
that's
basically the impact of, because I don't know much about the mining industry to be honest, but my first thought seeing at this crazy trend of the hash rate would be more my mind would go more towards nation states rather than public companies, but I get your point now.
Yeah. Now, the nation state's a really great question, though. I don't think it's had much of an impact to date, but I believe as we look forward, as this chart continues to move to the right, it will have a significant bearing on where that goes. Maybe for a different reason than some people would think. So for this, I'll try to be as succinct as possible. I think what we have to do is look at what do miners do? Okay, let's start with the fundamental. To date, meaning since 2009 till today, the first 16 years or so of Bitcoin, the product of mining has been Bitcoin. So if you said, what does a Bitcoin miner do, or what does a Bitcoin miner produce, it would be Bitcoin. Most of that being the subsidy. Now, as we look forward, I will say, and I think we're right at the changeover point now, the product of Bitcoin miners of the future is block space. And the commodity, and so, and I think we need to think of block space as a commodity. And of course, ultimately, they need to be compensated for producing that commodity.
Mm-hmm.
Now, if you think of miners like today,
for the moment, it's really not a very valuable commodity. Like with 2 sats per V-byte.
right? Yeah. But in the future, if you believe, like I do, that it is just a matter of time until Bitcoin is the base layer of money,
exactly.
Then if you look at the block space, you realize with some pretty simple math how precious it is. If we have 10-minute blocks on average, that means there are just over, there's right about 53,000 blocks per year. And there's nothing we can do to change that, right? The more popular Bitcoin gets, there's no more blocks on an annual basis. That's it. And we've already had the block size war, so we know how big the blocks are. They're 4 million weight units. And each of those fits about, 3,000 to 4,000 transactions. That's it. So what does that tell us? That means that on an annual basis, for the whole world, there are 150 to 200 million transactions per year. There are 8 billion people in the world. There are 335 million companies in the world. There are about 200 nations in the world. There's not really anything we can do to change the 200 million transactions. So it's my belief, we can argue about the time frame, but it's my belief that control of those 200 million transactions will be a massively powerful tool. It's also, in my mind, a massive responsibility. But not everybody may look at it that way, by the way, but that's how I look at it. So as an example, what I've given this example, if I take a small country like Albania or Bolivia or something, like some small country like that, and let's say that country has about 1/4% of the world's GDP. My advice to the leader of that nation is immediately find a way to get hash power equivalent to that number inside the border of your country. You get 1/4 or 1% of the world's hash power in your country as fast as you can. If you have to build it yourself, that's fine. But if you have to put tax incentives, grants, citizenships, whatever you have to do, give it a way to get that. But the caveat to everybody bringing the hash power is that you also need to create a Bolivia pool, and you must force everybody that takes advantage of those incentives to use the Bolivia pool and the Albania pool and the Kenya pool and the
This
Australia
is fascinating
pool,
because we tend to encourage, the orange pill nation states to buy Bitcoin.
Yeah.
But that's very much that's very different from actually mining. Yeah.
Correct. Yeah, I'm a contrarian in that I would say to them, don't worry about buying it right now. That's not it is not existential to the survival of your country to own Bitcoin. What is existential to the survival of your country economically is access to the monetary system itself. And you only get that by being a miner and creating block templates. Because if you create the block templates, so we use that example, right? If you control 0.25% of the world's hash power, then you will get a block every week, right? You'll have a block every week.
Which is reasonable.
Well, actually, you'll get more like two to three a week. But you will know that even if the U.S. and China and Russia all collude, and you are excluded from whatever monetary system exists on the fiat side in the future, that you will have 4,000 to 12,000 transactions that you can interact with the rest of the world. You can do the business of the government. You can your corporations can buy supplies and sell goods, and your citizens can also interact, right? But in other words, it is existential, in my opinion, to the countries of the future to have access and control over block space. And
do you think that with the layer twos getting bigger and getting more and more liquid, I mean, where could we go in terms of transaction capacity, leaving aside for the moment the security of L2s, which is, of course, has nothing to do with the security of the base layer.
Yeah.
So could layer twos fix this somehow, even for nation states? I mean,
well,
in case
I don't think the word fix, and I say it with respect, is probably the word we want to use there. Because while I'm not thrilled, as you probably can imagine, I'm not thrilled about saying, well, all these countries are going to be miners and creating templates. That's not kind of why we're into Bitcoin, right? But I also think and believe in the phrase, Bitcoin is for anybody. And so I don't think we can exclude them either. They are part of the anybody. If we are in a world where Bitcoin is the predominant base layer of money, even with the L2s doing their job, which, I'm rooting for them, whether it's Liquid or Lightning or Arc or Fedi, or, I've seen some stuff with zero knowledge proofs that's looking interesting. And we can move a lot of these transactions up into other layers. You still ultimately need base layer resolution for all these. Lightning channels open, close, they splice, as an example. And 200 million gets gobbled up really, really quickly. So I do think that we'll live in a world where those of us that have been in Bitcoin for a while, like the three of us, have had access to the base layer whenever we want for essentially free. And I think those days are going to be gone really soon. Yes. Yeah. Count it down, Danny. Count it down. But I think that was the plan. If you look at the word subsidy and you think about it, I think obviously I believe Satoshi was very brilliant in what he or she created. But I think we think about subsidy from the perspective of the miner and also from the perspective of issuer. Like, the subsidy is how Bitcoin gets into circulation. The subsidy is how the miner gets rewarded. We miss largely that subsidy encouraged users to participate and, gave us the opportunity in the early days to develop things like multi-sig and cold storage solutions and all these sorts of things. But the math never worked, even if you look at like Hal Finney, like early Hal Finney kind of writings and things. Hal had done the math. Hal knew his shit, and he knew that ultimately you can't have everybody on the world existing on the base layer. So it is a luxury. In the long run, that is a luxury. And it'll always be available, I think, but that doesn't mean everybody can afford it. Doesn't mean everybody gets to use it whenever they want. Like it's there. There's a great quote I use sometimes, and the quote is, "A luxury once enjoyed becomes a necessity." And we have had, to a certain degree, both the good fortune and the misfortune to have had access to this luxury, the unlimited access for free to the world's greatest digital network. But it's not going to be that way forever. Even if we just look at the corporations, think about this. There's 335 million corporations in the world. We can do 200 million base layer transactions a year. So if all of those companies have a corporate treasury, then once every 2 years, they can either move money in or take money out, each of them. That's it.
Yes, a lot of people are just gonna give up and just do second layer solutions, and then there's gonna have to be like huge strategies around it. It's gonna be tremendous. I'm glad you brought it up, because that was one of the questions I had about, like, would you, if it was already existing, would you use it? Because that's something I've been thinking about for a long time.
Which piece, Danny? If I
Like,
used what?
to have like a Bitcoin block space marketplace where miners would go to like prove the hash rate that they control, and therefore be allocated the option to like sell like transaction space, and for then companies who need to have payroll or whatever start using it.
Yes. I'm actually creating that, or I'm part of a group that we are creating that very marketplace, because it's part of the maturation that must occur, I think, for Bitcoin for the world to run on Bitcoin. There are certain things that have to happen. So, for instance, we'll use a big organization like Coinbase. Okay. So Coinbase is probably one of the largest users of the base layer, because people are withdrawing money from self-custody. They're doing lots of UTXO consolidation. So there's a lot of ins and outs and a lot of administrative stuff. Okay. Right now, if you look at financially how much money Coinbase spends on Bitcoin fees and how big the organization is, it's such a small number as to be meaningless. The Bitcoin fees that they pay are meaningless. However, in a future world, well, they have two issues. The first is that could get super expensive for them. So if they need to do 1,000 base layer transactions a week, as an example, but that's not an extremely high number for them. It's probably more than that. They don't know what the cost of that's going to be, because the way the marketplace works today, it's a real-time marketplace, right? So, like, if you guys are going on vacation, do you book your hotel ahead of time, or do you show up at the hotel and say, how much is a room? Right? You book it ahead of time, of course, right? And if it's too expensive, you either find a different hotel or you find a different day. Well, Bitcoin is kind of the same way in the current world. Like, if I want to send you guys Bitcoin right now, I have to go and see how much. Is it 3 sats per V byte? Is it 12? Is it 30? I don't know. And if I know I want to send you Bitcoin on September 3rd, we have no clue, right? And we also don't know how crowded it's going to be. So I guess to get to the point I'm trying to make, companies and nation states are going to have to know within reasonable windows of time they will have access and what the cost of that access will be. Otherwise, they can't use it, right? And so what we are creating is a marketplace for that. So me as a miner, I'm not this big, but let's say I was big enough to have 1% of the global hash rate. Well, that means that I would have 1.5 blocks a day. And so sitting here in early March, I could go, let's say, to the first week of June, and I could sell access to 2 blocks right now. I could say to the marketplace, I will sell at 6 sats per VByte, 8 million weight units in the first week of June. And people could go lock that in now. People that wanted to use block space could buy it now and lock it in. And then they would know for sure that come the first week of June that they're going to get into a block. And they may have overpaid, they may have underpaid, but at least they know for sure they're going to get in. I think that this is just part of Bitcoin getting mature. These derivative products are going to be very important. To be honest, I have mixed feelings about them though. Like there's a part of me that hates doing it because I feel it there's a certain spirit that we have within Bitcoin of not looking like Wall Street and not looking like all these big firms, but I don't think in the end, if we want to be the world's money, these things have to be available.
Well, I mean, where do you stand on the CCTV and other ideas of putting these protocols into place in Bitcoin so that there can be shared UTXOs? I mean, like, how do you feel about allowing those other opcodes to work?
I think we have to look at each opcode independently. I'm not 100% opposed to bringing some of them in at some point. I do not believe that they are likely to create any major alleviation of the problem that we're talking about. But I think that's a good thing also. Okay. That they will have use cases. Okay. I'm not saying there's no use case. I believe they help, but in a very small way and in very narrow areas. I don't think there are great general use cases. I think that in large part, in simple terms, a lot of the batching and the time locks and the different things that come with some of those opcodes don't solve. They're not the way that things really happen. Like if you wanted to buy my car for 1 Bitcoin, we're not going to go through that process. We're not going to go into some batch process that could take forever or that doesn't get resolved for a long time. Like, I think that we're going to want to be in a situation where it gets resolved in very known and defined timeframes. And the transactions that have these that are not urgent, that are not time dependent, are a lot fewer than most people think. So, and I think that has to be balanced with the changes to the protocol. Like if we look at SegWit, I think it's really debatable whether or not SegWit was good for Bitcoin or not. And I think there definitely have been numerous unintended consequences of SegWit. And so that worries me, whether it's OpCat, check template verify, some of the other ones that are kind of sitting out there. I'm still not convinced that we're at a point now where we really realize what all the possible ramifications of implementing those would be.
Mm-hmm. Yes, I mean, the thing is that like Lightning survival depends on settling on chain, and people, as we have just discussed, will not be able to afford to be settling on chain in the reasonably near future. And so, yeah, it's going to be complicated because we might have to live are going to have to live through that experiment.
Yes. But here, I'm glad you brought this up. This is a really good topic because here's the scary part for me. The scary part for me is that the signaling as to whether or not we'll take OpCat. Okay. Should we implement for OpCat? Well, the decision as to whether or not we should will likely be signaled through block template creation. So that's how SegWit was activated, right? It's how Taproot was activated, by blocks being created and signaling it. Well, we only have like 6 different organizations right now who are creating block templates in any meaningful way. So as things stand right now, it's Foundry and Antpool that get to decide the answer to your question. Bob Burnett's opinion is not really even relevant. Although I do create block templates through Ocean, but I'm part of less than 1% of, like at Ocean, we have several hundred block template creators now, people creating it, but we still collectively represent less than 1% of the hash rate. So the scary thing is the future of Bitcoin largely rests with these organizations. And it's because I'm coming full circle a little bit. It's not even proper to call what the community calls the public miners. They are not public miners. They're public hashers. They're hashing companies. Being a miner requires, like if we need to be specific about definitions sometimes, a miner is someone or an organization that's running a node connected to the Bitcoin network, managing a local mempool, creating their own templates, and hashing. They're only doing the hashing part, which is really not part of the network at all. So I believe like one of the big issues, and this goes back to the beginning, one of the big issues is that we have such a massive amount of the hashers who have abdicated and willingly given this power and responsibility to such a small group of people, even if they're great people. We can argue whether Antpool and Foundry are great or not. That's not even the relevant part. The relevant part is that just those two combined push us over 50%. And then if you put the Antpool proxies in, then we're at like 70%.
What do you think are ways in which this problem can be mitigated? Like one is the decentralized template creation, but do you think that that's enough?
No, it's not. I agree with you. It's a good question. Anything as powerful as Bitcoin is constantly going to be having people trying to control it. Like there's always a tug of centralization. And so whether that's pools and template creation, whether that's hash rate, whether that's I don't know, I'm drawing a blank, but there's always going to be something, right? I think the only way we can cure it is through education and awareness, and people have to care. And that's the distinction, I would say, between, so I'm Bitcoin class of 2017, okay? And so I came in the middle of the last block size war.
Mm-hmm.
I think if you look at the people who were, let's say, in that same period as me or before, their knowledge of Bitcoin, even if they came in for number go up, the general knowledge of that base is very high. Like, they get these things. And in the past, when certain centralization trends have been identified, the community has rallied against them. But we're at a point now where if we look at, let's say, the class of 2020, 2021 and beyond, I don't think they're acquiring knowledge at the same level that those early folks did. I don't think they're as interested. I'm not sure that they're as passionate on the whole.
Mm-hmm.
And you know, I get that. It's like my roots in the personal computer industry went back really to the late 70s. So if you were into personal computers in the late 70s, mid 80s, early 90s, you were kind of a geek, right? I mean, I wear that proudly. I'm a geek, okay? It's fine. And most of the people involved understood how a device driver worked. They upgraded their memory. They played with the firmware. They did all that sort of shit, right? Well, by the late 90s, early 2000s, the personal computers were everywhere. Everybody used them. But the passion to really get in and understand what was happening no longer existed. Certainly doesn't exist today, right? And I think Bitcoin's kind of the same way. As these different ways of adoption come in, the passion to dive deep gets weaker and weaker. And then that's kind of the danger, because they're excited about Bitcoin, that they're making money on Bitcoin. They probably get the basic elevator pitch of Bitcoin, but they don't want to get in and understand the difference between an FPPS and PPLNS mining pool. Okay.
I agree 100% with everything you just said. I am completely against hyper Bitcoinization. I don't think that that is good for our health, and that everybody should take things slowly and understand, because then we will have a more knowledgeable user base, which is ultimately who is in control of what direction this thing goes on.
Yes. Yeah. You should have said that. You did that in 10 seconds. It took me 5 minutes, but very good.
Oh my God. It's just, they're such like delicate subjects. I mean, we laugh about it and all that, but it really is very, very delicate. Okay, let's move 100 years into the future. What do you think is going to happen when there are no more emission, when the emission ends and the security of the system is completely based on fees?
I think we're fine. I think I'm more aggressive on this than others. We talked about block space scarcity already. I think in the 5 to 10 year window, we'll see that mining revenue is largely fee based by that point in time. So, and by 100 years from now, obviously, clearly it is all fee based. I think it will be fine. I also think, though, that if we go back to the nation states, or we go back to big organizations participating in mining, I think we have to look at it a little differently. People think about the economic incentive for miners as the subsidy plus the fees. And that's not holistically true. There's more. So when you look at mining, let me illustrate this. Is probably easier. Again, something I hate, but I believe will happen. Imagine that Citigroup becomes a very large mining organization. I believe they will. And I believe they will become a large organization, a large mining organization, because they will realize.
They know it yet?
Excuse me?
Does Citigroup know that yet themselves?
No, they don't. They don't, but they will. And like I said, sometimes I'm reluctant to say certain things because I'm like, well, I don't want to give them the idea, but I think it's better to
It will
educate.
come
Like, we
in
were
due
talking
course.
about. I think we have to play the game there, and know that they probably are going to come. And it could be Bank of America. But here's why. Okay, so if we live in a world where maybe we haven't hyper Bitcoinized, but Bitcoin is a major piece of the global economy, and the Bitcoin network is moving money on a global basis 24/7, 365. If I was Citigroup and I want to attract the largest corporate customers and high net worth customers in the world, so I'm going to go to General Electric and Tesla and Disney and all these big corporations, and I'm going to say, I want you to bank with me, both fiat banking and Bitcoin banking. And if you do bank with me, part of my value proposition is that I will give you access to, I'll pick a number out of the air, 25 base layer transactions a week for free.
I see why you're...
And if you do that, I mean, you put all your money with me, you bank with me, then this is a benefit of doing that. If I was American Express, and I card up, I say American Express card, right? Just happen to have one out. Well, I would go to all my high net worth customers and I would say, hey, if you pay the $500 a year, $1,000 a year annual fee, you get a certain number of base layer transactions as being a customer. So if you start thinking the way that I'm going here, what you see is that
it's very easy for Bitcoin to get to 1 million.
Oh yes, that's very true.
Beyond that.
There you go. You're doing a good job. But you can see that measuring. Yeah.
What will 1 million be worth, though?
Yeah.
Sorry, go ahead.
But the point is that measuring the value of the transaction can't be done in a micro basis. You can't look at an individual transaction because the value of the transaction is the value of the entire relationship between the big bank or American Express and their customer. They don't care. In other words, they're mining. They could care less about the fee. What they care about is that by providing that service to their customers, they're getting the whole relationship.
Okay. Yeah, I see what you're saying, where like financial institutions, in order to continue to hold their place as financial institutions, they will have to get involved in the business of mining.
Correct.
Yeah.
Correct.
Otherwise, it's no longer profitable.
Bob, when do you think is
it will be profitable, but sorry. I'm sorry. It will be profitable. It's just not measured in the way that you normally would measure. It's measured in the profitability of the relationship, not in the profitability of the mining.
Yes, what I mean is it'll be very hard for financial institutions to offer Bitcoin services if they are not themselves, even for Bitcoin companies. Like this applies to Bitcoin companies that want to offer financial services. Like if they're not mining, then they are going to be paying very high fees to access that space. I think it's very interesting.
Absolutely.
Yeah, in fact, I was going to ask, when do you think Strategy is going to start mining?
I'm a little
Oh.
surprised they aren't already. I'm surprised they are not already, because they have so much at stake that, it almost, because here's the funny thing. I don't believe it could happen to them owning the 500,000 Bitcoin that they own. But, this is why I said earlier, like, if I was giving advice to the president of Bolivia, I would tell him, hey, don't worry right now about buying Bitcoin. If you have a certain amount of money, spend it to acquire control of block space. Don't spend it on Bitcoin, because you could, let's say, own 10,000 Bitcoin as the country of Bolivia, but theoretically you could get completely blocked out, or your citizens could get completely blocked out. They could either make it so you can't, have a very difficult time accessing it. And I know some people would say, the game theory would say eventually they would find somebody to mine the block, and that's probably true. But they could be bled of that very quickly. But if they have access to the base layer, then their citizens and their corporations never get a blockade. It's like the modern equivalent of a blockade, right? It's an economic blockade. But as soon as you have, I'm not necessarily, Jason Lowry and his software stuff. I mean, there's a little bit of overlap in the way he thinks and the way I think. Although I'm not thinking about it from a defense perspective. I think about it from economic sovereignty perspective.
Mm-hmm.
Fascinating.
But I think I just understood Jason's point of view from what you have said better than, because then, like, I understand why for security, if you don't have mining, then you are like in a vulnerable position.
Yes, correct.
Yeah. Well, do you think, I know we have to come to a close, but one last question. Do you think that there's any hope for like the small time miners in terms of like home mining, or any future in home mining? Or do you think that at the very least you have to invest a couple thousand into like a mining company?
Okay. Really great question. Home mining, I think, will largely be fueled by the reuse market. I was at a conference in Denver 2 weekends ago. Things like the home furnaces, I can see people having pet bed warmers, aquarium heaters, all these sorts of things, where home mining is not going to be about making a tremendous amount of money. It's going to be about participation in the network, and maybe offsetting a little bit of heating costs or things like that. Now, the small scale commercial miner, which would be more what I do in my business, I think we have phenomenal opportunities, because we have access to energy opportunities that the big guys don't. So the big guys, they have an issue. Here's the issue for the big guys. Okay, if we look at all the world's energy, there's about 27,000 terawatt hours of electricity produced globally annually. Okay, Bitcoin mining is using about 190,000 right now. 190, excuse me. So 190 over 27,000. So that's about 0.67% of the world's electricity being used by the mining community today. Now, as you guys probably know, at a commercial level, if your energy is over, let's say, 5 cents per kilowatt hour, you're not in business. Like you gotta find it in that area. But the average global price of energy is 15 cents per kilowatt hour. So it's my estimate, it's a little hard to get this data. It's my estimate that only about 800 terawatt hours, maybe to 1,000 terawatt hours of energy is available at the right price for you to be able to mine Bitcoin. And we're already using almost 200 of it. Plus, Bitcoin mining has to fight AI, high performance computing, vehicle charging, who all want aluminum smelting. All these industries want that energy too. So where I'm going is I'm saying there's just not a lot of unexploited sources of energy at the right price. So the big guys don't want to do 2 megawatt projects. They want to do 50, 100, 200 megawatts. Well, they're not just laying around. In the early days of Bitcoin in 2021 and 22, they were all over the place. Well, they've found a lot of them already, and there will be some new ones coming out. However, scattered all over the world are small-scale hydroelectric facilities, stranded natural gas, biomass gas, like these types of things, but available in maybe 500 kilowatts or 1 megawatt or 2 megawatts. And in those kind of situations, we can often find, it's what my company does, we can often find sub 4 cent, even sub 3 cent per kilowatt hour energy, but only in small slices. So this is a way of saying, in a funny way, Bitcoin mining has this weird thing where scale, being big, is somewhat of a disadvantage. And the little guys can go in and pick up the crumbs that the big guys say are not worth them bending over to pick up and eat. But
yeah. What you just said is what gives me the most hope in terms of censorship resistant money, because it forces a certain degree of decentralization. And like the next bear market, like the hope is that the bear market kills the people who are using electricity that comes around about too easily. And so that then it has to be more widespread. Hopefully that's like the silver lining of the whole situation.
Yeah. I'm glad you said that, Nanny. I'm sometimes I come on and I talk to folks like you, and I probably come off as saying scary things, but I'm super optimistic. I am here. I wake up every day as a 6-year-old guy, excited for the future, excited for the world that Bitcoin will bring, and I believe all these things are solvable, but we have to talk about them. They by not talking about them, like any problem, right? Not talking about the problem just makes the problem worse. You have to talk about the problem.
Prepare for
And
the
I think,
worst. Yeah.
and the other thing I'll say too is, hey, the thing we're fighting for is a monetary system, and we're trying to wrest control of a monetary system that has been the basis of wealth and power for a massive group of the world's elite. And they're not going to go lightly. Like we should never be complacent. Even something that has a small chance of being a problem, we have to talk about it. We have to address it, because they will be continually trying to break us down. Even if we think we've won someday, we haven't won. You never win this, right? It's a battle for the next 1,000 years.
An ongoing process. I think it's really interesting because after, I think, the block size war, there was a little bit of censorship in Bitcoin, and there were a lot of things you weren't really allowed to talk about. So I like talking about the things that are scary and that are hush hush, because I also agree that it is in talking that we will find the solutions, and not obscuring the information and kind of hiding it, because then like great minds can come and try to solve the problem.
Exactly. Yeah.
Well, thank you for coming. Thank you for explaining all these concepts to us. I learned a ton in this interview. I hope the audience also learned a ton, because we touched on some like well-known subjects, but in ways that were very unique. So really, thank you really for sharing everything.
Same here. It was a real privilege, Bob. Thanks very much.
Thank you so much.
All right, to our audience, don't forget to leave your questions, comments, and share it with your friends. And don't forget to follow so you can stay tuned for the next one. Thank you, everybody.